the bank books. An asset reconstruction company limited, an asset management company would be set up to consolidate and take over the existing stressed debt and then manage and dispose of the assets to alternative investment funds and other potential investors for eventual value realization. Recapitalization of PSB. To further consolidate the financial capital capacity of PSBs, further recapitalization of 20,000 crores is proposed in 21-22. Deposit insurance. Last year, government had approved an increase in the deposit insurance cover from 1 lakh rupees to 5 lakhs for bank customers. I shall be moving amendments to DICGC Act 1961 in this session itself to streamline the provision so that if a bank is temporarily unable to fulfill its obligations, the depositors of such bank can get easy and time-bound access to their deposits to the extent of the deposit insurance cover. This would help depositors of banks that are currently under stress. To improve credit discipline, while continuing to protect the interest of small borrowers, for NBFCs with minimum asset size of 100 crores, the minimum loan size eligible for debt recovery under the Securitization and Reconstruction of Financial Assets and Enforcement of Security Interests SARFAESI Act 2002, it is proposed to be reduced from the existing level of 50 lakhs to 20 lakhs. Company matters. The decriminalization of the procedural and technical compoundable offences under Companies Act 2013 is now complete. I now propose to take up decriminalization of the Limited Liability Partnerships Act 2008. Honourable Speaker, I propose to revise the definition under the Companies Act 2013 for small companies by increasing the threshold for paid-up capital from not exceeding 50 lakh to not exceeding 2 crores and turnover from not exceeding 2 crores to not exceeding 20 crores. This will benefit more than 2 lakh companies in easing their compliance requirements. As a further measure which directly benefits startups and innovators, I propose to incentivize the incorporation of one-person companies by allowing one-person companies to grow without any restriction on paid-up capital and turnover, allowing their conversion into any other type of company at any time, reducing the residency limit for an Indian citizen to set up an one-person company from 182 days to 120 days, and allow also non-resident Indians to incorporate OPCs in India. This will be a big boost for startups. To ensure faster resolution of cases, the NCLT framework will be strengthened, e-court system shall be implemented, and alternate methods of debt resolution and special framework for MSMEs shall be introduced. During the coming fiscal, we will be launching data analytics, artificial intelligence, machine learning driven MCA 2.1 version to MCA 21 version 3.0. MCA 21 version 3.0. This version 3.0 will have additional modules for e-scrutiny, e-adjudication, e-consultation, and compliance management. disinvestment and strategic sale. In spite of COVID-19, we have kept working towards strategic disinvestment. A number of transactions, namely BPCL, Air India, Shipping Corporation of India, Container Corporation of India, IDBI Bank, Bharat Earth Movers Limited, Pawan Hans, Neelachal Ispat Nigam Limited, among others, would be completed in 21-22. Other than IDBI Bank, we propose to take up the 2 public sector banks and 1 general insurance company in the year 21-22. This would require legislative amendments, and I propose to introduce the amendments in this session itself. In 21-22, we would also bring the IPO of LIC, for which I am bringing the requisite amendments in this session itself. In the Atmanirbhar package, I had announced that we will come out with a policy of strategic disinvestment of public sector enterprises. I'm happy to inform the House that the government has the government has approved the said policy. The policy provides a clear roadmap for disinvestment in all non-strategic and strategic sectors. We have kept 4 areas that are strategic, where bare minimum CPSEs will be maintained and rest privatized. In the remaining sectors of all CPSEs will be privatized. The main highlights of the policy are mentioned in Annexure 3. To fast forward the disinvestment policy, I'm asking NITI to work out on the next list of centre public sector companies that would be taken up for strategic disinvestment. To similarly incentivize states to take to disinvestment of their public sector companies, we will work out an incentive package of central funds to states. Idle assets will not contribute to Atmanirbhar Bharat. The non-core assets largely consist of surplus land with government ministries and departments and public sector enterprises. Monetizing of land can either be by way of direct sale or concession, or by similar means. This requires special abilities, and for this purpose, I propose to use a special purpose vehicle in the form of a company that would carry out this activity. In order to ensure timely completion of closure of sick or loss-making CPSEs, we will introduce a revised mechanism that will ensure timely closure of such units. I have estimated 1,75,000 crores as receipts from disinvestment in BE 21-22. Government financial reforms. Under the Treasury single account, the TSA system, autonomous bodies directly draw funds from the government's account at the time of actual expenditure, saving interest costs. We will extend the TSA system for universal application from 21-22. On the recommendation of the 15th Finance Commission, we have undertaken a detailed exercise to rationalize and bring down the number of centrally sponsored schemes. This will enable consolidation of outlays for better impact. The government is committed to the development of multi-state cooperatives and will provide all support to them. To further streamline the ease of doing business for cooperatives, I propose to set up a separate administrative structure for them. So the third pillar of Atmanirbhar Bharat, inclusive development for aspirational India. Honorable Speaker, sir, under this pillar, I will cover agriculture and allied sectors, farmers' welfare and rural India, migrant workers and labor, and financial inclusion. Agriculture. Our government is committed to the welfare of farmers. The MSP regime has undergone a sea change to assure price that is at least 1.5 times the cost of production across all commodities. The procurement has also continued to increase at a steady pace. This has resulted in increase in payment to farmers substantially. In case of wheat, a total amount paid to farmers in 2013-14, Honorable Speaker, sir, the data that I give now is important for all honorable members to kindly hear. In case of wheat, the total amount paid to farmers in 2013-14 was 33,874 crores. In 2019-20, it was 62,802 crores. And even better, Honorable Speaker, in 2020-2021, this amount paid to farmers was 75,060 crores. Honorable Speaker, again an important fact, the number of wheat growing farmers that were benefited increased in 2020-21 to 43.36 lakhs compared to 35.57 lakhs in 2019-20. That much of an increase within 1 year. For paddy, again, an important data. For paddy, the amount paid in 2013-14 was 63,928 crores. In 2019-20, this increased to 1,41,930 crores. Even better, in 2020-2021, this is further, in 2020-21, this is further estimated, and I'm saying this is further estimated because the procurement is ongoing, and therefore I can't give you the final figure. This is further estimated to increase to 1,72,752 crores. The number of farmers benefited increased from 1.24 crores in 2019-20 to 1.54 crores in 2020-21. In the same way, Honorable Speaker, sir, in the case of pulses, the amount paid in 2013-14 was 236 crores. In 2019-20, this was increased to 8,285 crores. Now in 2021, it is at 10,530 crores. More than 40 times increase from 2013-14. The receipts to cotton farmers have seen a stupendous increase from 90 crores in 2013-14 to 25,974 crores I'm giving you data as of 27th January 2021. This is bound to increase. From 90 crores for cotton farmers in 2013-14 to 25,974 crores in 2021. All the details in complete narration is available in Annexure 4 to my speech. Early this year, Honorable Prime Minister had launched the Swamitwa scheme. Under this, a record of rights is being given to property owners in villages. Up till now, about 1.80 lakh property owners in 1,241 villages have been provided cards. I propose during 21-22 to extend this to cover all states and union territories. To provide adequate credit to our farmers, I have enhanced the agricultural credit target to 16.5 lakh crores in this year. We will focus on ensuring increased credit flow to animal husbandry, Pashupalan, dairy, and to Matsyakar, to the fisheries. We are enhancing the allocation to the Rural Infrastructure Development Fund from 30,000 crores to 40,000 crores. The Micro Irrigation Fund, with a corpus of 5,000 crores, has been created under NABARD. I propose to double it by augmenting it by another 5,000 crores. To boost value addition in agriculture and allied products and their exports, the scope of Operation Green Scheme that is presently applicable to only tomatoes, onions, and potatoes will be enlarged to include 22 perishable crops. Around 1.68 lakh crore farmers, around 1.68 crore farmers are registered, and 1.14 lakh crores of rupees trade value has been carried out through e-NAMs, the National Agricultural Market. Keeping in view the transparency and the competitiveness that e-NAM has brought into the agricultural market, 1,000 more mandis will be integrated with e-NAM. Honorable Speaker, sir, with all this, the Agricultural Infrastructure Fund would be made available to the APMCs for augmenting their infrastructure facilities. Fisheries. I am proposing substantial investments in the development of modern fishing harbors and fish landing centers. To start with, 5 major fishing harbors, Kochi, Chennai, Visakhapatnam, Paradip, and Petua Ghat, will be developed as hubs for economic activity. We will also develop inland fishing harbors and fish landing centers along the banks of rivers and waterways. Seaweed farming is an emerging sector with potential to transform the lives of coastal communities. It will provide large-scale employment and additional incomes. To promote seaweed farming and cultivation, I propose a multi-purpose seaweed park to be established in Tamil Nadu. Migrant workers and laborers. We have launched the One Nation, One Ration Card scheme, through which beneficiaries can claim their rations anywhere in the country. Migrant workers in particular benefit from the scheme. Those staying away from their families can partially claim their ration where they are stationed, while their family in their native places can claim the rest. I am happy to inform you that One Nation, One Ration Card plan is under implementation by 32 states and union territories, reaching about 69 crore beneficiaries. That's a total of 86% beneficiaries covered. The remaining 4 states and UTs will be integrated in the next few months. To further extend our efforts towards the unorganized labor force, migrant workers in particular, I propose to launch a portal that will collect relevant information on gig workers, building and construction workers, among others. This will help formulate health, housing, skill, insurance credit, and food schemes for all migrant workers. We will conclude a process that began 20 years ago with the implementation of the 4 labor codes. For the first time globally, social security benefits will be extended to gig and platform workers. Minimum wages will apply to all categories of workers, and they will all be covered by the Employees' State Insurance Corporation. Women will be allowed to work in all categories and also in the night shifts with adequate protection. At the same time, compliance burden on employers will be reduced with a single registration and licensing. At the same time, compliance burden on employers will be reduced with a single registration and licensing. At the same time, compliance burden on employers will be Stand Up India, the single registration financial and licensing. At the same time, compliance burden on employers to Stand Up India, the marginal money required financial and licensing. At the same time, compliance burden on employers to Stand Up India, the marginal money required financial and licensing. And to also ensure compliance burden on employers to Stand Up India, the marginal money required financial and licensing. And to also ensure compliance burden on employers in the number of steps marginal money required financial and to also ensure compliance burden on employers in the number of steps marginal money required financial and to also ensure compliance burden on employers in the number of steps marginal money required financial and to also ensure compliance burden on employers in the number of steps marginal money required financial and to also ensure compliance more than 15,000 marginal money required financial and to also ensure compliance more than 15,000 marginal money required financial and to also ensure compliance more than 15,000 marginal money required financial and to also ensure compliance more than 15,000 marginal money required 2021-22 is estimated to be 6.8% of the GDP. The gross borrowing from the market for the next year would be around 12 lakh crores. We plan to continue with our path of fiscal consolidation and intend to reach the fiscal deficit level below 4.5% of the GDP by 2025-2026, with a fairly steady decline over the period. We hope to achieve the consolidation by first increasing the buoyancy of tax revenue through improved compliance, and secondly, by increased receipts from monetization of assets, including public sector enterprises and land. The Contingency Fund of India is being proposed to be augmented. The Contingency Fund of India is being proposed to be augmented from 500 crores to 30,000 crores through Finance Bill. In accordance with the views of the 15th Finance Commission, we are allowing a normal ceiling of net borrowing for the states at 4% of GSDP for the year 21-22. A portion of this ceiling will be earmarked to be spent on incremental capital expenditure. Additional borrowing ceiling of 0.5% of the GSDP will also be provided subject to conditions. States will be expected to reach a fiscal deficit of 3% of GSDP by 2023-24 as recommended by the 15th Finance Commission. In the July 2019-20 budget, I introduced the Statement 27 on extra budgetary resources. It disclosed the borrowings of the government agencies that went towards funding Government of India schemes and whose repayment burden was on the government. In my 2020-21 budget, I enhanced the scope and coverage of that statement by including the loans provided by government to the FCI, the Food Corporation of India. Taking a step further in this direction, I propose to discontinue the NSSF loan to FCI for food subsidy, and accordingly, budget provisions have been made in RE 2020-21 and in the BE 2021-22. The extra budgetary resource details are at Annexure 6. We know that the FRBM Act mandates fiscal deficit of 3% of GDP to be achieved by 31st March 2020-2021. The effect of this year's unforeseen and unprecedented circumstances has necessitated the submission of a deviation statement under Sections 4 of Subclause 5 and Section 7, Subclause 3b of the FRBM Act, which I'm laying on the table of the House as part of the FRBM documents. Towards achieving central government fiscal deficit along the broad path that I have already indicated, I will be introducing an amendment to the FRBM Act. Honorable Speaker, on the 9th of December 2020, the 15th Finance Commission submitted its final report covering the period 2021 to 2026 to the Rashtrapati Ji. The government has laid the Commission's report along with the explanatory memorandum in the Parliament, retaining the vertical shares of the states at 41%. We recognize our commitment to fiscal federalism and propose, therefore, to adhere to this recommendation. Jammu and Kashmir in the 14th Finance Commission was entitled to get devolution being a state. Now the funds of the UTs of Jammu Kashmir and Ladakh would be provided by the centre. I have also provided, on the Commission's recommendation, 1,18,452 crores as revenue deficit grant to 17 states in 21-22, as against 74,340 crores to 14 states in 2020-21. Honorable Speaker, I would now move to Part B of my speech. Honorable Speaker, the world is facing a serious challenge of the pandemic and its aftershock. In these trying times, when many economies are struggling to revive, our people and our industry have exhibited remarkable resilience. As I mentioned already, post-pandemic, a new world order seems to be emerging, one in which Asia is poised to occupy a prominent position, and India will have a leading role therein. In this scenario, our tax system has to be transparent, efficient, and should promote investments and employment in our country. At the same time, it should put minimum burden on our taxpayers. I borrow the words of Thiruvalluvar, the saint. ஏற்றலும் ஈட்டலும் காத்தலும் காத்த வகுத்தலும் நல்ல வல்லதரசு. A king or a ruler is the one who creates and acquires wealth, protects and distributes it for common good. Tirukkural. Direct tax proposals. Keeping this in mind, the words of Tirukkural, our government introduced a series of reforms in the direct tax system for the benefit of our taxpayers and economy. Few months prior to the pandemic, in order to attract investments, we slashed our corporate tax rate to make it among the lowest in the world. The dividend distribution tax too was abolished. The burden of taxation on small taxpayers was eased by increasing rebates. In 2020, the return filers saw a dramatic increase to 6.48 crores from 3.31 crores in 2014. In the direct tax administration, we had recently introduced the faceless assessment and faceless appeal. I now seek to take further steps to simplify the tax administration, ease compliance, and reduce litigation. Relief to senior citizens. I begin my direct tax proposals by offering my pranam to our senior citizens. Many of them, despite having foregone several basic necessities of their own, have strived to build our nation. Now, in the 75th year of independence of our country, when we continue our endeavor with renewed vigor, we shall reduce compliance burden on our senior citizens who are 75 years of age and above. For senior citizens who only have pension and interest income, I propose exemption from filing their income tax returns. The paying bank will deduct the necessary tax on their income. Reduction in time for income tax proceedings. This is a very key announcement, if you ask me. Honorable Speaker, presently an assessment can be reopened up to 6 years and in serious tax fraud cases for up to 10 years. As a result, taxpayers have to remain under uncertainty for a very long time. I therefore propose to reduce this time limit for reopening of assessments to 3 years from the present 6 years. In serious tax evasion cases too, only where there is evidence of concealment of income of 50 lakh or more in a year. In serious tax evasion cases too, only where there is evidence of concealment of income of 50 lakh or more in a year can the assessment be reopened up to 10 years. Even this reopening can be done only after the approval of the Principal Chief Commissioner, the highest level of Income Tax Department. Setting up the Dispute Resolution Committee. Honorable Speaker, It has been the resolve of this government to reduce litigation, which mars the present taxation system. The government came out with the Direct Taxation Vivad Se Vishwas scheme to give taxpayers an opportunity to settle long-pending disputes and be relieved to further strain on their time and resources. The response from taxpayers has been the best ever, as over 110,000 taxpayers have already opted to settle tax disputes of over 85,000 crores under the scheme. To further reduce litigation for small taxpayers, I propose to constitute a dispute resolution committee for them, which will be faceless to ensure efficiency, transparency, and accountability. Anyone with a taxable income up to 50 lakh and disputed income up to 10 lakh shall be eligible to approach the committee. Faceless IT-AT. For ease of compliance and to reduce discretion, we are committed to make the taxation processes faceless. The government has already introduced faceless assessment and appeal this year. The next level of income tax appeal is the Income Tax Appellate Tribunal. I now propose to make this tribunal faceless. We shall establish a national faceless Income Tax Appellate Tribunal Center. All communication between the tribunal and the appellant shall be electronic. Where personal hearing is needed, it shall be done through video conferencing. Relaxations to NRI. When non-resident Indians return to India, they have issues with respect to their accrued incomes in their foreign retirement accounts. This is usually due to mismatch in taxation period. They also face difficulties in getting credit for Indian taxes in foreign jurisdictions. I propose to notify rules for removing their hardship of double taxation. Exemption from audit. Currently, if your turnover exceeds 1 crore, you have to get your accounts audited. In February 2020 budget, I had increased the limit for tax audit to 5 crores for those who carry out 95% of their transactions digitally. To further incentivize digital transactions and to reduce compliance burden, I propose to increase this limit for tax audit for such persons from 5 crores to 10 crores. Relief for dividend. In the previous budget, I had abolished the dividend distribution tax in order to incentivize investment. Dividend was made taxable in the hands of shareholders. Now, in order to provide ease of compliance, I propose to make dividend payment to rate and InvIT exempt from TDS. Further, as the amount of dividend income cannot be estimated correctly by the shareholders for paying advance tax, I propose to provide that advance tax liability on dividend income shall arise only after the declaration or payment of dividend. Also, for the foreign portfolio investors, I propose to enable deduction of tax on dividend income at lower treaty rate. Attracting foreign investment into infrastructure sector. In the last budget, for attracting foreign investment in the infrastructure sector, we had granted 100% tax exemption, subject to certain conditions, to foreign sovereign wealth funds and pension funds on their income from investment in Indian infrastructure. We have noticed that few of such funds are facing difficulties in meeting some of the conditions. In order to ensure that a large number of funds invest in India, I propose to relax some of these conditions relating to prohibition on private funding, restriction on commercial activities, and direct investment in infrastructure. In order to allow funding of infrastructure by issue of zero-coupon bonds, I propose to make notified infrastructure debt funds eligible to raise funds by issuing tax-efficient zero-coupon bonds. Affordable housing and rental housing. This government sees housing for all and affordable housing as priority areas. In July 2019 budget, I provided an additional deduction of interest amounting to 1.5 lakh for loan taken to purchase an affordable house. I propose to extend the eligibility of this condition by 1 more year to 31st March 2022. The additional deduction of 1.5 lakh shall therefore be available for loans taken up to 31st March 2022 for the purchase of affordable houses. Further, to keep up the supply of affordable houses, I propose that the affordable housing projects can avail a tax holiday for 1 more year till 31st March 2022. These are available now for projects also. We are committed to promote supply of affordable rental housing for migrant workers. For this, I propose to allow tax exemption for notified affordable rental housing projects. Tax incentives to IFSC. As I mentioned in Part A of this speech, the government is committed to making the International Financial Services Center in GIFT City a global financial hub. In addition to the tax incentives already provided, I propose to include, among others, tax holiday for capital gains for aircraft leasing companies, tax exemption for aircraft lease rentals paid to foreign lessors, tax incentive for relocating foreign funds in the IFSC, and to allow tax exemption to the investment division of foreign banks located in the IFSC. Pre-filling of returns. Honorable Speaker, in order to ease compliance for the taxpayer, details of salary income, tax payments, TDS, etc., already come pre-filled in income tax returns. To further ease filing of returns, details of capital gains from listed securities, dividend income, and interest from banks, post office, etc., will also be now pre-filled. Relief to small trusts. We hope to reduce compliance burden on small charitable trusts running educational institutions and hospitals. So far, there is a blanket exemption to such entities whose annual receipt does not exceed 1 crore of rupees. I now propose to increase this amount to 5 crores. Labor welfare. We have noticed that some employers deduct the contribution of employees toward provident funds, superannuation funds, and other social security funds, but do not deposit these contributions within the specified time. For these employees, this means a loss of interest or income. In cases where an employer later becomes financially unviable, non-deposit results in a permanent loss for the employees. In order to ensure that employees' contributions are deposited on time, I reiterate that the late deposit of employees' contribution by the employer will not be allowed as deduction to the employer. Incentives for startups. In order to incentivize startups in the country, I propose to extend the eligibility for claiming tax holiday for startups by 1 more year, till 31st March 2022. Further, in order to incentivize funding for the startups, I propose to extend the capital gains exemption for investment in startups by 1 more year till 31st March 2022. Sir, I now come to indirect tax proposals. GST. Before I come to my indirect tax proposals, I would like to appraise the House on GST. The GST is now 4 years old, and we have taken several measures to further simplify it. Some of the measures include nil return through SMS, quarterly return and monthly payment for small taxpayers, electronic invoice system, validated input tax statements, pre-filled editable GST return, and staggering of returns filing. The capacity of GST and system has also been enhanced. We have also deployed deep analytics and artificial intelligence to identify tax evaders and fake billers and launched special drives against them. The results speak for themselves. We have made record collections in the last few months. The GST Council has painstakingly thrashed out thorny issues. As chairperson to the Council, I want to assure this House that we shall take every possible measure to smoothen the GST further and to remove anomalies such as inverted duty structure. Custom duty rationalization. Our custom duty policy should have the twin objective of promoting domestic manufacturing and helping India get on to global value chain and export better. The thrust now has to be on easy access to raw materials and exports of value-added products. Towards this, last year, we started overhauling the customs duty structure, eliminating 80 outdated exemptions. I also thank everyone who responded overwhelmingly to a crowdsourcing call for suggestions on this revamp. I now propose to review more than 400 old exemptions this year. I repeat, I now propose to review more than 400 old exemptions this year. We will conduct this through extensive consultations, and from 1st October 2021, we will put in place a revised customs duty structure free of distortions. I also propose that any new customs duty exemptions, therefore, henceforth will have validity up to 31st March following 2 years from the date of the issue. Electronic and mobile phone industry. Domestic electronic manufacturing has grown rapidly. We are now exporting items like mobiles and chargers. For greater domestic value addition, we are withdrawing a few exemptions on part of chargers and sub-parts of mobiles. Further, some parts of mobiles will move from nil rate to a moderate 2.5%. Iron and steel. MSMEs and other user industries have been severely hit by a recent sharp rise in iron and steel prices. Therefore, we are reducing customs duty uniformly to 7.5% on semis, flats, and long products of non-alloy, alloy, and stainless steels. To provide relief to metal recyclers, mostly MSMEs, I am exempting duty on steel scrap for a period up to 31st March 2022. Further, I am also revoking ADD and CVD on certain steel products. Also, to provide relief to copper recyclers, I am reducing duty on copper scrap from 5% to 2.5%. Textiles. The textile sector generates employment and contributes significantly to the economy. There is a need to rationalize duties on raw material inputs to man-made textiles. We are now bringing nylon chain on par with polyester and other man-made fibers. We are uniformly reducing the BCD rates on caprolactam, nylon chips, nylon fiber, and yarn to 5%. This will help the textile industry, MSMEs, and also overall exports. Chemicals. We have calibrated customs duty rates on chemicals to encourage domestic value addition and to remove inversions. Apart from other items, we are reducing customs duty on naphtha to 2.5% to correct inversion. Gold and silver presently attract a basic customs duty of 12.5%. Since the duty was raised from 10% in July 19, prices of precious metals have risen sharply. To bring it closer to previous levels, we are rationalizing customs duty on gold and silver. Renewable energy. In Part A, we have already acknowledged that solar energy has huge promise for India. To build up domestic capacity, we will notify a phased manufacturing plan for solar cells and solar panels. At present, to encourage domestic production, we are raising duty on solar inverters from 5% to 20% and on solar lanterns from 5% to 15%. Capital equipment and auto parts. There is immense potential in manufacturing heavy capital equipment domestically. We will comprehensively review the rate structure in due course. However, we are revising duty rates on certain items immediately. We propose to withdraw exemptions on tunnel boring machine. It will attract a customs duty of 7.5% and its parts a duty of 2.5%. We are raising customs duty on certain auto parts to 15% to bring them on par with general rate on auto parts. MSME products. We are proposing certain changes to benefit MSMEs. We are increasing duty from 10 to 15% on steel screws and plastic builder wares. On prawn feed, we increase it from 5 to 15%. We are rationalizing exemption on import of duty-free items as an incentive to exporters of garments, leather, and handicraft items. Almost all of these items are made domestically by our MSMEs. We are withdrawing exemption on imports of certain kinds of leathers as they are domestically produced in good quantity and quality, mostly by MSMEs. We are also raising customs duty on finished synthetic gemstones to encourage domestic processing. Agriculture products to benefit farmers. We are raising customs duty on cotton from nil to 10%, on raw silk and silk yarn from 10 to 15%. We are also withdrawing end-use-based concession on denatured ethyl alcohol. Currently, rates are being uniformly calibrated to 15% on items like maize, bran, rice bran, oil cake, and animal feed additives. There is an immediate need to improve agricultural infrastructure so that we produce more while also conserving and processing agricultural output efficiently. This will ensure enhanced remuneration for our farmers. To earmark resources for this purpose, I propose an agricultural infrastructure and development cess on a small number of items. However, while applying this cess, we have taken care not to put additional burden on consumers on most items. Rationalization of procedures and easing of compliance. For their judicious application, we propose certain changes in the provisioning related to ADD, anti-dumping duty, and CVD, countervailing duty levies. To complete customs investigation, we are prescribing definite timelines. In 2020, we rolled out the Turant Customs Initiative, which brought in faceless, paperless, and contactless customs measures. With effect from September 2020, we have implemented a new procedure for administration of rules of origin. This has helped in putting a check on misuse of FTAs. The specific details of direct and indirect tax changes proposed are listed in the annexure to my speech. Honorable Speaker, sir, with these words, I commend the budget to this august House. Thank you.
आइटम नंबर 1, माननीय मंत्री जी, आइटम नंबर 1.
Sorry, I don't have it with me. Sir, I wish to place on table the 15th Finance Commission report.
आइटम नंबर 3, माननीय मंत्री जी.
So I wish to lay on the table the following statements under Section 3(1) of the Fiscal Responsibility and Budget Management Act 2003, the medium-term fiscal policy cum fiscal policy strategy statement and macroeconomic framework statement.
Item number 4.
So I wish to seek your permission to move for leave to introduce the Finance Bill 2021.
प्रश्न ये कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए। जो सदस्य इसके पक्ष में हाँ कहें, जो सदस्य इसके विरोध में ना कहें। मेरे विचार में निर्णय हाँ वालों के पक्ष में हुआ, हाँ वालों के पक्ष हुआ। माननीय मंत्री जी विधेयक को पुनर्स्थापित करें।
introduce the bill.
श्री प्रहलाद जोशी जी।
With your permission, I rise to present the 18th report of Business Advisory Committee.
माननीय सदस्यगण, माननीय वित्त मंत्री जी के बजट भाषण की प्रतियां प्रकाशक फलक पर उपलब्ध है। सदस्य अपनी प्रति प्रकाशन फलक से प्राप्त कर सकते हैं। माननीय सदस्यगण, जैसा कि आपको समाचार 2 के माध्यम से पहले सूचित किया जा चुका है कि बजट की प्रतियां आपको मेंबर्स पोर्टल के माध्यम से उपलब्ध कराई जा रही है। सभा की कार्रवाई मंगलवार दिनांक 2 फरवरी 2021 को दोपहर 4 बजे तक के लिए स्थगित की जाती है।